Good morning, traders. It is 8 a.m. on Wednesday, the 12th of August, 2015. Thanks for joining. 8 a.m. Chicago time, that is. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. So, another surprising move by the People's Bank of China, causing all kinds of movement overnight and frankly catching a lot of people with their pants down, I think. European markets are lower for a second day with further depreciation of the yuan continuing to rile markets. Asian markets close lower. Chinese currency tumbles for a second day, biggest two-day slump in 20 years. U.S. futures are lower. Gold and oil are higher. The U.S. dollar is lower versus the pound, lower versus the yen and the euro. China again devalues its currency, causing a large move in U.S. Treasuries, up move in U.S. Treasuries, down in equity indices, and volatility in the currency markets. This move is a follow-up after yesterday's surprise move. Yesterday's surprise move was accompanied with comments that this would be a one-time only move on behalf of the PBOC. The fact that they did this again at 8 o'clock Central last night is putting the market on edge. When this sort of thing happens, there's a tendency to think, well, gee, are they really in control? Sources are saying that PBOC is under pressure from the government to weaken yuan further for devaluation of 10%. China's FX regulator told banks yesterday to limit dollar purchases by some companies. Back to Greece. Greece is the Greek PM asked Parliament to vote on a bailout agreement on Thursday. Greek managed to secure, I think it was 80 billion euros worth of relief. And then finally, corporate debt frenzy leaves investment-grade market cold. The supply of new investment-grade corporate debt has hit record levels in 2015. Almost $900 billion of investment-grade debt has been issued in the U.S. so far this year. That is 19% higher than the amount raised in 2014 and the highest year-to-date number on record. This is also playing a role in a bearish turn in long-term fund flows. That's an interesting, I'm just pointing that out, even though it may not be relevant to today's trading. There are some fundamental moves being made right now, which we need to pay attention to. Also, China missed its numbers. Fed's Dudley, speaking currently, says Chinese growth has slowed. What happens in China currency has huge implications for global demand and for commodity prices. He will not comment on the moves made by the Chinese governments, but again, he thinks that whatever moves they make would have a tremendous impact on the global economy. Again, to me, that's another red flag. And I think the Chinese numbers last night came out pretty poor. I'm just scrolling back to find them. Vehicle sales are off. Let's see. Yeah, the money supply is a little bit higher and so on and so forth. But you can look that up. I'm not going to go over every news item. But I think we have in my opinion, ahead of us, we have what looks like some volatility coming around the corner. So you better be prepared for it. These volatility introduces a lot more opportunity for gain and loss. So just be prepared for a market that's likely to shake, rattle, and roll. Looking ahead at today, at 9 o'clock Central, just a half hour after the open, we're looking for U.S. JOLTS job openings, expecting 5.35 million. At 9:30 Central, we're looking for U.S. Department of Energy, U.S. crude oil inventories, expecting negative 2 million. Distillate inventories expecting positive 1 million. And U.S. gasoline inventories expecting negative 600,000. At 1 o'clock Central, 2 Eastern today, we're looking for the monthly budget statement, expecting negative 138 billion as the figure. And after the market today, we're looking for Cisco earnings. Cisco is expected to announce earnings of 56 cents. That's it for the news. We've spent plenty of time on that. Let's look at what we did yesterday versus what was expected. So yesterday's hypo, again, for those who are here, yesterday's hypo was opening in the middle of this gap zone due to the Yuan news. So open in the middle of the gap zone, and we expected an open auction out of range, which is exactly what we got. And then what I had suggested as hypo 1 is a test up into the prior day's range with 2090 being the cap. Why 2090? Does anybody remember? Of course, you cannot respond. But 2090 was the overnight point of control and a couple other confluences there. And I had stated that hypo 1 was for a test up to 2090, looking to be a seller anywhere within the push. So potential drop from here, which is what happened right there. A quick test of the prior day's range and a drop. That didn't hold up too well. It started to push back up, chop sideways. You could see clearly it's an open auction, and then finally it breaks higher. But plenty of opportunities to get short. On the short, the expectation was chop, 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 test, drop to the 2077, if you recall, this naked point of control plus last Friday's high. Bounce back up, chop, 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 and then we're looking for a drop down to the 7350 point of control, again from last Friday, and then the expectation is for it to chop around in here and potentially pull down into this point of control, right? This LVN right down here. Couldn't quite get there, but you know what? Yesterday's hypo 1 played out beautifully. It was iffy in here, but remember the context. As long as the context does not change, then the hypo is in play. Another thing, I got an email saying, "Yeah, that's great that all these hypos come out, play out the way expected or whatever. The market plays out that plan often, and that's what all I'm looking for. But where do you get on? How do you trade them?" And that's not for me to answer. I have my way of getting on. I look for price action based failures. But it's hard for me to tell you how do you trade that hypo. But it's a huge advantage, and I hope you can see that. It's a huge advantage to have a plan. And that's the whole point of this exercise of these trader bites, is to come in, look at the market as it is for what it is, and to generate some sort of a plan so that you're ready to get short when the market is confirming a short idea, to get ready to get long when the market's confirming a long idea. We don't want to take too much price risk for the information to find that out, but I can't sit here and talk about exactly how to enter these trades. That is a highly personal thing, and if you don't have the experience yet to know that, then this is something that you're likely to come and realize over time. The other thing, the other comment that I received that was interesting is well, it seems to go through your levels. Like this was my key target for hypo 1, and the market dropped down to 2070.75. I was at 73.50. 70.75 is right there. And the person's like, well, you said it would go to 73.50. Why did it go to 70.75? And I understand that, again, we all have different levels of competence with trading, and a lot of us come from fields where where precision is key. Precision is futile in trading. We're not going after precision. We're going after accuracy. We're going after high confidence, high probability plays. But I'm looking for accuracy. For those of you who don't know the difference between accuracy and precision, precision tells you exactly what the figure is. You can if you're giving someone directions, you can say the restaurant is 1.732 miles from here, and that's precise. But the person could walk north when they should have walked south. Accuracy is to say the restaurant's about a mile and a half south. That's accurate, but it's not precise. I'm looking to be somewhat accurate as I could be. I don't care to be precise. I don't care that this bounced off of 73, 75. It missed the target initially by a tick. I'm not interested in that. I'm always front running my levels. I'm more interested in what is the flow of the market. Is it following the general plan I'm looking for? And I'm looking for opportunities to jump in, a price to lean against, or size to lean against, or a level to lean against, and what it does after that. You can see here after it hit the 73, 75 and bounced up, it pushed right through, and then from there it just formed an upwards moving channel. It was pretty much done on the downside. And if you look at this on a higher time scale, you'll see that the move played out as expected. We had an impulsive move down, we had a continuation move, and then we started to have a correction back up. And as the market is dropping, and I posted this yesterday on Twitter, I posted an image of this, as the market is dropping, as prices are dropping, the delta is rising. And what I had talked about, and I pointed this out around here, where I was saying, look, watch that delta. It's going higher as price is dropping in the same area. It's accumulating. And I made the dumb joke that delta, give me the news type of thing. I played that song where the market looked like it was accumulating on the way down. We have taken out the weak structure behind us. So this unauctioned area got thoroughly auctioned. We have an open auction that's as beautiful as it gets as far as a complete auction is concerned. As long as it does not breach the next LVN down, which it didn't, then the chances are it is likely to push back up and into the next acceptance zone, which is up here, the most recent acceptance zone, which is up here. That's what I was looking for. Once we hit the 73.50, the delta was confirming that. That was a beautiful setup, and it ended up running up into the close just as expected. I didn't discuss this on the Trader Bite. I was just looking for the initial plan, the initial hypo. But this run up in the afternoon could be predicted and played out pretty well. Now, we are trading down here. This is a news shock based price 2062 or below the 2066 key high volume node down here, and the overnight low is at the LVN. Look at this, the overnight low is at the key LVN that we traded at, that we were looking for as the next level down if this low is broken. The low is broken, looking for 59.75 and 53.50. The low overnight's 53.75. Very methodical. So I know I'm talking too much today. This is going to go a little bit longer than usual. So let's look at what happened yesterday and break this move down. Again, 8 o'clock news. There's the impulsive move. There's the flag or the consolidation. There's the continuation move. So this is the impulse right here. And then this is the continuation. And then here's the potential corrective move. We have thin air above this 2070.75. So if it gets back into yesterday's range, if it holds this balance zone here and gets into yesterday's range, I am not a seller today. I am looking for this to walk its way up. I believe the market's being accumulated at lower prices. I can see evidence of that, and I expect that if we break through this 2070 and recover yesterday's lows, then the market's likely to push back up fairly quickly, with the target being that 2080 again. So overall, you know, the overnight move played out, and I stayed up for this, so I'm maybe a little bit incoherent this morning, but I saw this move. I was not here for this, but I was waiting for this. I was waiting for the drop, and it finally happened. So that was beautiful. But this morning, if it takes back this 2070, 2071 area, I will not be a seller, whereas yesterday I would have been. I did speak about being a seller for further lows. So the primary objective today is it's likely to open out of range. I don't expect that it'll run up in the next 13 minutes. I expect it to chop around, attempt lower, and then I'm looking for it to take out the overnight point of control right here, and I'm looking for it to push into the prior day's range, pull back, chop around, and then for it to get back into the 2080 again. That's what I'm looking for today. I'm not looking for a continuation down, although the higher those who are trend following and so on and look at price action alone, the higher probability is likely to be, the bigger play is likely to be a move lower as the market digests this news, with the transit of the point of control downwards. The expectation is it would continue to go downwards until we have a neutral day. A neutral day is one that breaks these yellow lines up, the first hour's high and low, and reverses and closes near the top. So if yesterday had broken the IB low, chopped around and moved above, that would trigger the expectation that a continuation higher. But today, I'm looking for it to chop, test lower, and then push back into yesterday's range and regain the 2080. That's based on the last couple of days and how they've traded. Okay? Confusing? Hopefully not. A quick moment to look at the 10 years. Someone in the Stage 5 chat room has asked me to look for that. Look at that. This is what he trades. The 10 years, okay, this chart looks a little bit messy here with all the numbers, kind of freaky, but we can see the overall pattern. 10 years pushed basically to highs, failed high, down, dropped down, and then we pulled back right in here. We pulled back to that consolidation low, and it has had it's this impulsive, it's continuation move right here. This is impulsive continuation, and what we're in is corrective. The target for the 10-year is likely to be this 128.22, and overall this market's very orderly. It's been pushed around. It's been kicked around a little bit by the Yuan news. It's got some weak structure. You can see the gap zone here, and the price gap all the way down here. But overall, it's very methodical in its rally, and it's causing yields. This market's pricing in the expectation of no moves on from the Fed. Yields are getting lower as price goes higher, and this is showing flight to safety. So the market has opened at 720 here and has sold off. But if we look at the full session, if we look at the 24-hour session, we'll see that it's been getting strong pops. Here's the strong pop from yesterday, and here's last night's move. Very impulsive moves on news that have yet to be completed. This impulsive move has continued, but overall, I'm looking for the this market to pull back a little bit today. I'm looking for this to work its way back down. That's where part of where the rally in the equities is likely to come in, and then I'm looking for it to continue higher as indicated. But probably not today. I think this has gotten ahead of itself here a little bit and likely to get some rest. Same thing with the bonds, but it's 20 minutes in at the moment, and I'll let you go. I want to remind everyone the next Trade Wisdom segment's coming out today. This episode covers discipline. Discipline, their books have been written about it. There's a lot that's been said about discipline, but I'm going to break it down to what's relevant to you as a trader, and it's another important topic. Again, I hope you looked at the last Trade Wisdom segment about success in trading. I tell it just like it is. I've seen people come fresh into trading, make the turn, and I've seen people come in and blow out. And I've gone through that process myself. So check out last week's Trade Wisdom segment on success in trading, and in today's Trade Wisdom segment should be out later in the afternoon. Thanks for tuning in. Take care.